Welcome to the Riskwiser Zone. I'm your host, Lewis. Today, we're diving into a fascinating topic that's been making waves in the music industry: the rise of AI-generated music and its impact on streaming platforms. Recently, Spotify announced a new initiative to verify non-AI artists with a Verified by Spotify badge, aiming to combat the increasing presence of AI-generated music on their platform. This move comes after several high-profile incidents, including the discovery that a rock band with over 1 million Spotify streams was completely AI-generated. The incident sparked outrage and raised questions about the authenticity of music in the digital age. According to a survey by Deezer, an overwhelming majority of people cannot tell AI-generated music apart from songs written and performed by actual humans. Spotify's new badge will be awarded to artists who comply with their policies, have consistent listeners, and have an identifiable presence both on and off platform. The company aims to verify over 99% of the artists that listeners actively search for at launch. However, it's worth noting that initially, profiles that appear to primarily represent AI-generated or AI persona artists won't be eligible for a badge. This development raises interesting questions about the future of music creation and consumption. While some platforms have opted to ban AI music, Spotify's initiative signals a potential acceptance of more AI-generated music on their platform. As the music landscape continues to evolve, it will be important to balance the need for authenticity with the creative possibilities offered by AI technology. We'll be exploring this topic further in upcoming segments, including the implications for investors and the potential impact on the music industry as a whole. For now, it's clear that the rise of AI-generated music is a complex issue that requires careful consideration. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're continuing our discussion on global events that impact risk and uncertainty. Our middle segment today focuses on the escalating tensions in the Middle East, particularly the crisis surrounding the Strait of Hormuz. The strategic waterway has been a point of contention between Iran and the United States, with both countries engaging in a war of words and actions. The situation began to deteriorate after the initial U.S.-Israeli strikes that killed Ali Khamenei, the former supreme leader of Iran. His son, Masoud Khamenei, was wounded in the attack and has since been named as his successor. The new Iranian leader has vowed to continue his father's legacy and defend the country's interests. The United States, under the leadership of President Trump, has imposed a blockade on Iranian ports, aiming to cripple the country's economy and force it to surrender its nuclear program. In response, Iran has maintained its control over the Strait of Hormuz, disrupting global oil supplies and driving up prices. The international community is growing increasingly concerned about the situation, with the United Nations chief, Antonio Guterres, warning that the closure of the strait is strangling the global economy. The International Energy Agency has also sounded the alarm, stating that the world is facing the biggest energy crisis in history. As the standoff continues, there are fears of a prolonged and devastating conflict. The Iranian president has described the U.S. blockade as intolerable, while Israeli Defense Minister Israel Katz has hinted at further military action against Iran. The situation remains volatile, with both sides refusing to back down. The global community is watching anxiously, hoping for a peaceful resolution to the crisis. As we continue to monitor the developments, one thing is clear: the Middle East conflict has far-reaching implications for global risk and uncertainty. Welcome back to the Riskwiser Zone. As we wrap up today's show, let's take a look at some market updates that may impact your investment decisions. First off, global markets are reacting to the latest economic data and central bank decisions. The U.S. Federal Reserve's recent move has sparked a rally in stocks, but it's essential to keep an eye on inflation and interest rates. Meanwhile, international trade tensions continue to simmer, affecting commodity prices and currency exchange rates. Closer to home, Indian stock exchanges, including the NSE and BSE, are closed today due to Maharashtra Day. If you're planning to trade, be aware that the Multi-Commodity Exchange of India will have a truncated session, while the National Commodity and Derivatives Exchange will remain closed for the day. On a related note, we've seen some significant movements in small-cap stocks recently, particularly those listed on the NSE. The Nifty Small Cap 50 index has been outperforming its larger counterparts, driven by strong earnings growth and increased investor interest. However, as with any high-growth segment, it's crucial to approach these investments with caution, considering factors like valuation, liquidity, and sector-specific risks. Another development worth mentioning is the surge in popularity of exchange-traded funds or ETFs. These investment vehicles offer diversification, flexibility, and often lower fees compared to actively managed mutual funds. With the Indian ETF market expected to grow significantly in the coming years, it's an exciting space to watch for investors looking to build a robust portfolio. As we conclude today's episode of the Riskwiser Zone, remember that staying informed is key to making smart investment decisions. Keep a close eye on market trends, economic indicators, and regulatory changes that may impact your investments. Always prioritize risk management and diversification to ensure your portfolio remains resilient in an ever-changing market environment. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and until next time, keep your finances in check.